Happy New Year. Hope you're well, and hopefully it is a new year for these markets. Have you seen anything in the news or anything from policymakers that would suggest this market's about to find a bottom this quarter?
Hopefully. We've already seen the authorities lowering the RR cut, and we've seen a rate cut lately. And therefore, there can be other measures that the authorities can come up with to stimulate the economic growth, especially when the Omicron situation is resulting in some lockdowns in the cities in the mainland. And therefore, if the economy derails further, I believe that the government is fully capable of stimulating the economy a little bit more.
Would that be the catalyst that would make you change your mind, because you guys are still neutral right now on Chinese equities?
Actually, we are waiting for the virus situation to become under control. Right now, we're still seeing outbreaks, and we are hearing lockdowns. And we do want to see that situation being controlled before we change our mind on the Chinese equities.
Would that mean the zero tolerance strategy for COVID? Would that mean then, say if I look at estimates, whether that's earnings or economic forecasts right now, are the risks to the downside still?
It looks like that's the case. If there are downside, if the economy is going to be locked down, then economic activity is definitely going to be hurt. For example, if factories are going to be locked down, some of the export or manufacturing companies will be hurt in terms of earnings. And when it comes to the earnings season in March, very likely we're going to see some revisions downwards. So there's going to be downward risk for the equity market as a whole.
Okay, well, let's look at earnings estimates then for this year. I'll read out just a few here. 18% EPS upside here for MSCI China CSI 300. About 30% each, roughly speaking, Shanghai Composite and Hang Seng Tech Index. Do you think that's what we're going to get? Because that's not bad if we do get those earnings upgrades.
It is looking quite good right now, especially when compared to the valuation that we're looking at for the market. However, if the lockdown situation or if the virus situation does not come under control soon enough, then I think there will be downside to the estimate that we're looking at.
Okay, one of your calls, and you guys have had this call for a bit now, is overweight on new energy vehicles. And you probably know where I'm going with this, because you probably also saw the news over the weekend that from 2023 China will be stopping subsidies. How do you think that changes the dynamics for this year and also next year for the industry?
Sure. If the subsidy is going to be stopped starting from 2023, we're likely going to see some front loading in terms of purchasing of EVs from the end users. So in 2022, before the subsidy stops, I think buyers would get out there and buy. And in other words, 2022 compared to 2021, the volume growth is likely going to be quite high. So that would give some support to the EV sector companies for at least the first half of 2022.
And you're still overweight renewable energy. Is that along the same reasons why you're overweight new energy vehicles too? Or is that different?
It's also, firstly, it's the same. And the second thing is it's going in line with the government's long-term target. And therefore, over the medium to long run, I think this is still a very good sector to be in.
How about internet? Things are, well, they look cheap. We've been talking about how they've looked cheap for I would say about 7 months now. Have we found a bottom for these big platform stocks?
We are still hearing about the internet companies wanting to invest in the platforms. So it's a CAPEX cycle. So when the investment is still going on, that means that earnings growth may be below the historical average. And therefore, I don't think, even if the share price has already bottomed out, there may not be much of an upside from the current levels.
Okay, now you mentioned something earlier, valuation. The economy's slowing, but there's a policy trough that people have pointed to as perhaps supporting the economy a couple of months down the road. How are you looking at benchmark valuations right now? Do things look generally cheap, or do you think we might see more downside near term?
Valuation's already very cheap. Having said that, we need to see a sustainable growth driver in order for the market as a whole to be re-rated. And right now, we're still looking for that driver. And in the meanwhile, the Omicron situation is not favorable at all. And therefore, there can be downside from the current level. And in view of that, having said that, the government may come up with further stimulus in order to support the economy. And therefore, we're likely going to see a range trade situation, at least for the next 3 to 6 months in the Hong Kong equity market.
Now, final question, I guess. We can't look at these markets divorced from the macro reality where the Fed's going to be raising rates. It looks like that's going to be the case this year. Do you think we will be able to get that catalyst for Chinese equities against the backdrop of rates moving up elsewhere?
There can be another catalyst that can represent another catalyst to support the Hong Kong-China equity market as a whole. Having said that, we do need to see the fundamental situation over here in Hong Kong-China to improve fundamentally and hopefully sustainably in order to get a sustainable re-rating over here.